Hey traders, welcome back to J Trading. In the last videos we have been talking about trend line strategies to trade boom and crash as well as volatility. So today's video will be third part of it and I'm hoping that you will catch up everything. But before we get started, I'm giving away the Ledger Nano X cryptocurrency offline wallet or equivalent amount in the Bitcoin, which is right here on the screen. So to be eligible for the giveaway, all you need to do is step 1, subscribe to my channel and turn on the bell. Step 2, smash the like button, and step 3, put anything you want on the comment section. And also, if you're interested in cryptocurrencies like Bitcoin and Ethereum, the link will be in description. Join our Telegram group where we help our people to earn Ethereum by decentralized matrix project called Forsage. Okay guys, in the last couple of videos we have been talking about trend line strategies, how to identify a market which is in uptrend or downtrend, and also the market which is in consolidation, and how to trade breakouts also, either in upward direction or downward direction. So today I will show you guys one chart illustration from Boom 1000, and I chose the chart from April to September. So I'll show you that now. As you can see here on the screen, this is chart from Boom 1000 and it's on a daily time frame. Some of you have been asking me that in order to scalp, how are we going to use daily time frame, because most of the time I analyze market on daily time frame. The answer for that is it's okay, because you need to start analyzing the market from higher time frames like daily, then go to 4 hour, then go to any type of time frame that you prefer. So I'll start from daily time frame now. So anytime in the market there are 3 type of phases. Either the market will be in consolidation phase like this, moves up and down, up and down. This is called consolidation phase. And another phase is called upward trend like this. The market will go up, pull back again, will run, pull back, run, pull back and run. So the market might be on uptrend like this. And the third one will be downtrend like this. The market will start from up, will run, then pull back again, will run, pull back, run, pull back and run. So we have 3 market phases: consolidation, uptrend and downtrend. Always the market is one of these. So as you see on this chart, Boom 1000 is on consolidation phase because the market has been moving on the sideways direction like this. There was no upward movement. So finally, as you can see, around this point the market is trying to push upward. So whenever we see this kind of momentum, we need to start spotting points. It's okay, you can trade on this consolidation phase, but I prefer trading breakouts. So on this video I'll show you how to trade this breakout. At the end of this consolidation phase, we have got almost 3 equal points. As you can see, I'm drawing a region where market has been rejected. First rejected here, again rejected here, and again rejected here. So this indicates that at this point the market has been reacted many times. So we can focus this point maybe as an entry or a breakout or a resistance or a support. As you can see, this area is a resistance area. Okay, after identifying the confluence area or a resistance region like this, we need to put some rectangular region like this. Some people prefer to draw one line, but I prefer drawing a region like this because it might help you to see the wider angle. So after drawing this kind of rectangle, wait for the market to break out. First the market rejected here, again rejected here. sorry, let me change the color of the arrow. So the first rejection was here, second here, and third part was here. Some traders might trade here because we got two confirmations on the previous point. So if you put your stop loss above this point and you take profit maybe below down here or halfway here, that will be a good trade because the market went in that direction. So after this point, the market again tried to reject at this point, but finally was able to break out. Okay, finally we got what we wanted. The market broke out of the consolidation phase. It was in consolidation around this point, and finally the market was able to break out. So after you see breakout, you need to be attentive. Okay, follow the market to come back to that region or the region where we drew. So whenever the market comes back to that area, if the candlestick has any kind of rejections like this, or if you see any kind of pattern formation at that area, that will be a good entry. So you can put your stop loss down below that region and you take profit maybe above this area, because we have two market rejections around this point. So this will be our first win, because if you enter here, the market went up all the way up. So this will be our first win. And most of the time I use trailing stop loss. So after I enter, if the market goes in my direction, I move the stop loss to entry, then to take profit 1, then to take profit 2, and so on. So I follow the market. So finally I might get stopped out here. That will be our first win. Then the market pulled back to the region again, and again we got another opportunity, and this will be another opportunity also. So we got a smaller win here. You will be stopped out here. So now we have totally 2 wins. The first one is here. The first one is here, our biggest win from this point to this point, and again smaller win here. But third one, market came back, and let's say you put your stop loss at this point. If you are using a tight stop loss, let's say you put stop loss at this point, you will be stopped out, right? Yeah, the market will touch your stop loss, so this will be a loss for you. It's okay because we got 2 wins before. So I'm going to show you the ratio. Like last time I've talked about a win and a loss ratio. Now we have 2 wins and 1 small loss. So let's continue analyzing the market. So after these 2 wins and 1 loss, we see a rejections, and we kind of see a smaller downtrend. I'll show you that. If you see this area right here, we have high, then another low, then low and low. So the market was on a smaller downtrend like this. You can draw a trend line like this. So most of the time, if the market is moving on a major uptrend, there will be minor downtrends like this. So now the market was on a minor downtrend at this point. This area right here, it's a minor downtrend. That will be another opportunity because it might give us a good entry, because we are waiting for a buy entry, right? Because this is uptrend. As you can see here, we have high point, another higher point. These are called higher lows, so we can connect them together. All these points together, we get trend line. Let me show you. So you can trade your trend line, you can draw your trend line like this. Yeah, so this is a trend, uptrend, and we got smaller or minor downtrend, and we got rejections also at this point, right? This right here, again here, again here. And okay, before this point, the market was, let's say the market was here inside the trend before the breakout. So what are we going to do? Let's spot a hot region or hot area where the market might get rejected. So this here it's a resistance, right? The market got rejected 3 times, so it can act as a valid resistance point, and the market was on downtrend here on the minor point. Now we wait for the market to break out of this smaller trend, this smaller downtrend, right? Okay, finally the market broke out of the trend like this. So we don't enter the market blindly as soon as it breaks the trend. I've told you this many times, right, in the previous videos. So the market break out of this smaller trend and went up to this resistance level, and the resistance rejected the market back down. Now this will be a good entry because we will be waiting for the market to reach back to this area, because this area, it can be a hot place, it can be support right here. I hope you see this point. This point right here, we got a big rejection with a green candlestick, another rejection right here. We have also 2 rejections right here, so we can connect all those points and wait for the market to come back. So after waiting a little while, the market came back to the region where we're waiting for. Then we enter our trade here and we put our stop loss halfway down here. As we have expected, the market went all the way up. If you're using trailing stop loss, you will definitely be stopped out around here, so all these points will be a profit. Okay, now we've got another win. Let us calculate our win and loss. How many wins do we have? Win is equal to total 3, right? Loss is equal to only 1. We have we won 3 trades and we lost 1, so we will continue like this. Okay, the market went up as we predicted and we got stopped out here. Then the market came back and it was actually false breakout, so it doesn't matter because we took our profit around this point. So the market broke inside this support area, it didn't reject again. Then wait for the market again to be rejected or to move out of the consolidation phase, this phase. So the market broke that point, went up again. Okay, if I clean this chart, you might see rejections at this point. This is a big rejection. Again, the market was rejected here, and also we see rejection here. So what does it mean? We can connect those points as hot places. I mean, the market might get rejected another time, so draw a rectangular region like this. While waiting, the market went up and broke down again. Unfortunately, the market broke down like this, like a false breakout. But definitely you will take a trade right here. Why? First, it's the support area. This area right here, it has been acting as support since like days. It was confirmed here, here, here. So on this point, since this point is near to the trend line, we can also take this as a good opportunity. We have 2 solid reasons. This part is support, and again this trend line also acts as a support. So we take our trade here and we put our stop loss halfway down, and again this will be a win-win, and you will definitely be stopped out here. Another win. Okay, now let's go back and count our wins and losses. Our first win was this point, in second small win here, and loss here, first loss actually, then another win here, 3 wins. Again we won a trade here, big win actually, big shark. So how many wins? 1, 2, 3, 4 wins and 1 loss. Okay, you might actually get stopped out here, you might lose, so we can consider this point as loss because this was a false breakout. After the market broke out and came back, after you see these rejections, you might enter right here and let's say you put stop loss around this point and you got stopped out, so we will count that point as a loss. How many wins? 4 wins and 2 loss. Okay, now we are at this point. Now we are at this point. The market stopped us here because our stop loss is trailing stop loss. After this, the market decided to go down back to the trend line, right? But before that, we have the region we have been waiting for. Here the market was rejected and again rejected, so the third time also it got rejected at this point. This will also be another opportunity, right? So if you take a trade right here and put stop loss halfway on this, if this phase is a consolidation phase, you can put your stop loss halfway between this consolidation phase. So you get a win here. This will be another win also. Okay, finally, after this win, let's say we got stopped out here, the market decided to go down, right? But before that, we need to spot other points. We need to spot the areas which can act as support or resistance. Now we need support because our market is above that point. So we got rejection here, 3, 4 rejections. So we can connect all those points. Let's connect these points together, and this area will act as support for us, right? So whenever the market comes back, that will be another good opportunity, because this area is support. This area is a support area, and plus this point is a confluence point because that's a trend line. Okay, let's say you took a trade right here on this point, and if you have a good amount of money on your balance, let's say you put your stop loss down here halfway, you will not be stopped out because the rejection will be above that stop loss. But if you have smaller account, you might get stopped out above this point, so that will be third loss. How many times we win? We won a trade more than 4 times, but we lost only 2 trades. This is how you trade the trade. And finally, this is, I think today the market was like this. Next, we don't know what the market will do, but we can react with the market. So what we are going to do now, we have to draw hot areas like this. This one is already paused, so the next hot area will be this point. Draw a rectangle like this. Market rejected here at this point. Market first rejected here, again rejected here. So now the price is coming back to this point. If it gets rejected back, or if we see any kind of pattern or confirmation, we take that trade. And if the market goes up, put your stop loss, trail it, move it with the market, and that will be a profit. But if it goes against you, put stop loss, and that will be a loss. It's okay. But another time when the market comes back to this point, again this point will also be a confluence area, because this is a support and this trend line will also act as a support. So if the market goes up again, that will be another win. But if it goes against us and it breaks the market, wait for the retest to that support, then that will be another trend reversal and another opportunity, another story. So we'll talk about that later in the next coming videos. Today's video will be like this. Next week I'll be back with another brand new video. Stay tuned, guys. The giveaway will be on the next week. I will give the Ledger Nano, so stay tuned.